Most people think you need a six-figure salary, a decade of savings, or a massive business empire to quit your job. But what if I told you that for countless ordinary people, financial freedom didn't start with any of that? It started with just one rental property. Not 10. Not a real estate empire. Just one. This isn't some motivational fantasy. It's about how the math actually works. Let's break it down, step by step, and show you how it's possible. First, you need to understand a simple but powerful truth. Your job pays your bills, but your assets pay for your freedom. A rental property is an asset because it generates cash for you every single month. And that cash has nothing to do with how many hours you work. So, how does someone go from owning a single rental property to finally walking away from their 9 to -5? It all begins with a concept called leverage. Now, I know what you're thinking. Debt is bad, right? We're taught to avoid it. But in real estate, debt can be your most powerful tool, especially when someone else is paying it off for you. Imagine this. You decide to buy a small rental apartment or a starter home. You don't pay the full price in cash. Instead, you get a loan. Here's where the magic happens. You find a good tenant to rent out the property. Every month, that tenant pays you rent. Now, that rent money doesn't just go into your pocket. It has a job to do. First, it covers the monthly loan payment to the bank. Then, it pays for property taxes. It also covers insurance and a little bit set aside for maintenance and repairs. And if you've run the numbers correctly, after all those expenses are paid, there's money left over. That leftover money is called cash flow. In the beginning, your cash flow might not seem like much. Maybe it's just a couple $100s a month. That's enough to cover your car payment or your grocery bill. Or maybe it just reduces some of that financial stress you feel at the end of the month. It doesn't sound life-changing yet, but something incredible is happening quietly in the background. Every single month, your tenant is paying down your loan for you. This means your debt is shrinking and your ownership stake in the property, your equity is growing. You are literally building wealth without lifting a finger or using a single dollar from your salary. Now, let's fast forward a few years. What has happened? First, due to inflation and demand, the value of your property has likely increased. Second, rents have probably gone up a little bit too. And third, your loan balance is significantly lower than when you started. You now have a chunk of equity in that property. At this point, you have options. You can use the equity in that first property to buy a second one. This is the part that confuses most people. They think, wait, how can I possibly afford a second property when I barely managed to get the first one? And the answer is simple. You don't use your salary. You use your asset. When you go back to the bank for another loan, they don't just look at your job income anymore. They look at your rental property as a business. They see that it's generating stable, predictable income every month. That cash flow makes you a stronger borrower. So, the equity and cash flow from your first property help you qualify for the loan on the second property. You buy that second property, find a tenant, and the cycle repeats. The rent from your new tenant pays off the second loan. And again, you have some cash flow left over. Now, instead of one asset helping you pay one or two bills, you have two assets paying for multiple bills. Maybe now your rentals cover your mortgage, your car payment, and your utilities. At this stage, something profound happens in your mind. Your job is no longer your only lifeline. You have a safety net, a real one, built not on your time but on your assets. Your salary starts to feel optional. This is the exact moment when people begin to take back control of their lives. Some people reduce their work hours to spend more time with family. Others switch to a less stressful, more fulfilling job, even if it pays less. And some, when the numbers are right, finally decide to quit their job altogether. They don't do this because they became millionaires overnight. They do it because their essential living expenses are covered by a predictable, passive income stream. This is the real secret. You don't need to be fabulously wealthy to achieve freedom. You just need enough predictable income to cover your life. And rental income is predictable when you do it right. You find good, long-term tenants. You buy properties in desirable locations. And you always make sure your cash flow is positive from day one. Over time, these properties become even more powerful. Eventually, the loans get paid off entirely. Can you imagine that? All the rent, minus taxes and expenses, becomes pure cash flow. Rents continue to rise with inflation, but your biggest expense of mortgage is gone. The cash flow that once paid for a few bills now completely replaces your old salary, and then some. And here's the part that most people never even consider. Even after you've quit your job, the system keeps working for you. You still own the properties, which are valuable assets. You still earn income every single month. You still benefit as property values continue to rise over the long term. You've officially stopped trading your time for money. Your money, invested in assets, is now working for you. Now, let's be realistic. Is this completely risk-free? Of course not. No investment is few. You might have to deal with bad tenants who don't pay rent. Unexpected repairs can and will happen. The housing market can go through downturns. But think about it. Your job also has risks. You depend on one employer, one boss, one company's success. With real estate, your risk is spread across multiple assets and multiple tenants, and these risks can be managed. You manage them with thorough tenant screening, by keeping an emergency fund for repairs, and by being conservative with your loans and your numbers. The biggest mistake people make isn't taking on too much risk. It's waiting too long to start. They wait for the perfect market. They wait until they have more savings. They wait until they feel more confident. But while they're waiting, inflation is eating away at their savings. Rents are rising, and prices are going up. Opportunities are quietly passing them by. Almost every financially free real estate investor I know started exactly the same way, with one property, one loan, and one tenant. They didn't quit their job the next day. They were patient. They let the asset do the heavy lifting. They let the rental income slowly replace their need for a paycheck. And then, one day, they had a simple but powerful realization. My job pays me once a month, but my properties pay me every single day, even when I'm sleeping. That's the moment your job becomes a choice, not a necessity. And it didn't happen because of luck, or a winning lottery ticket, or a rich uncle. It happened because they understood one fundamental rule: let your assets pay for your life. And for so many people, it all started with just one single rental property. Thanks for watching, and don't forget to subscribe for more tips on building your financial freedom.